Hi dear traders and investors, I'm glad to present to you a red hot market review prepared by analytics and forecasters FxCo portal. Here we go. Today is December 12th and we have pivot points for euro-dollar pair from Evangelos Poulakis. The pair closed last week with a vaguely formed candlestick. Bulls tested the monthly resistance level of 1.0611, but failed to break through it. At the same time, bears were also lacking momentum to take over the market. So, the two forces continued to compete with each other. Today, the resistance for bulls is found at 1.0611, while the bearish pressure is limited by support at 1.0442 of the short-term trend. While trending in a narrow range on higher time frames, the pair is testing the key levels on the lower ones. Today, these levels are located at 1.0518, weekly long-term trend, and 1.0543, daily pivot point. A further move below this area will intensify the selling pressure. The intraday support levels are found at the standard pivot levels of 1.0497, 1.0457, and 1.0411. Consolidation above the key levels of 1.0518, 1.0543 will strengthen the bullish buyers. The upper targets for the day are the levels of 1.0583, 1.0628, and 1.0669, standard pivot levels. Let's trade pound-dollar pair from resistance and support levels. Jakub Nowak reports. For long positions, you can buy pound when the quotes reached 1.2245 and take profit at the price 1.2285. Growth will resume if there are very good statistics. But remember, when that buying, the MACD line should be above zero or is starting to rise from it. Pound sterling can also be bought at 1.2217. However, the MACD line should be in the oversold zone, as only by that will the market reverse to 1.2245 and 1.2285. For short positions, you can sell pound when the quotes reach 1.2217 and take profit at the price of 1.2184. Pressure will return if reports indicate a strong GDP contraction in the last month and quarter. But take note that when selling, the MACD line should be below zero or is starting to move down from it. Pound can also be sold at 1.2245. However, the MACD line should be in the overbought zone, as only by that will the market reverse to 1.2217 and 1.2184. S&P 500 index could fail. How? Ask Laurie Bailey. Quotes on the weekly chart of the S&P 500 bounced down from the upper boundary of the price channel. The Marlin oscillator also turned down, showing an intention to move into negative territory. Most likely, the decline will end the current Fibonacci movement, with the line of 9th timeframe crossing the lower limit of the price channel at 3255.00. That level coincides with the 261.8% of Fibonacci retracement level. So there is a high chance that quotes will hit the target level by January next year. In terms of the daily chart, quotes reverse towards the MACD line, blue line on graphic, and moving beyond 3885.00 will be a signal for more decisive downturn, especially since the Marlin oscillator is already in negative territory. That's all for today. Have a nice trading day. See you next time.